Hello guys, this is John again and I'm back. Today we're gonna actually put those resistance and support lines into practice. In my last video I talked about a little bit of candle formation and the naked price action here and uh, whether the candles are bullish or bearish, meaning they're going up or going down. And we learned how to draw our support and resistance lines, right? So today we're gonna actually put them into practice and start trading. Um, so basically what we're gonna do first is draw those lines again because I got nothing here in my chart. So let's find some areas here of congestion. You can see that the graphic, the candles here, they moved very, very little during the first, which was Sunday, so that's weekend. So it actually doesn't move at all, and I'm not really sure you guys are going to be able to trade during weekends. So because of the very low volatility. Anyhow, let's try and draw our support and resistance lines. I believe here we could say this is like probably the minimum price of today of the second. So I want to draw a line here because as you can see this line also acted as a resistance here, so it was a resistance here and then here it became a support. All right, so let's do it. That's one, and let's find another one. Well, maybe here at 1975 you can see as it acted as support here and then as a resistance here and then a resistance here again and then resistance again, and then it finally broke out. So let's go. There you go. And well, right now the price has been traded at 523 and a quarter, and it hasn't changed much. I mean, besides this uh, big and huge movement here of 10, 55, 11 o'clock. Oh, 11 o'clock, there was a news. There was news regarding, let me check here, 11 o'clock. Just 1 second, guys. By the way, if you guys are going to have an economic calendar, I really recommend you guys should have one so you know ahead the time and hour of the news. I got one here, which is br.investing.com/economic calendar slash. So 11 o'clock was PMI. Yeah, PMI industrial ISM set. So it was of high volatility, and that's why the market, that's why that we actually have this big movement here. So let's keep on drawing our lines. I believe here it's somewhere around in this point here. We have a resistance which also acted as a resistance here for this. So let's go. Let's go with 520. 75, 520.75, that's it. 520.75, here we go. And right now, probably somewhere around here. Can you see this candle here, this doji here? So the market is having trouble like breaking out the 523 line. See, it broke out here, but just went back. It's going up again. And this is probably, well, as you can see here in my chart, we got like, have no more reference. So this is probably the highest price from this month and last month. We haven't seen the price going this high up quite a while then. So we could probably say this here is a resistance. Can you see how the body of the candle was closed here at 524 and a quarter. So we have here the shadow or the tick of the candle going up, but the candle opened here and closed here. Then this doji where it actually opened and closed same place. Then again, the third candle touching this level here of 504 and a quarter. So I'm gonna draw a line here at 524 and a quarter. There you go. And one below it. And this is tricky. Look, this the body of the candle here. This body actually was a little bit longer than the previous one, but if you guys analyze, this is probably very congested area. Let's go for it. The thing is, the price is actually too close to our support lines, so I did not advise you guys to trade very close to the level of price that has been traded right now. We would rather look for another resistance or support lines. And what are we going to do? So we're going to go against the movement of the market. So the market, let's say the market, if it breaks out this support line and keeps going down, and down, what are we going to do? You have here a line, a support resistance line. We're going to buy here. So every line that is above, that is below the price is a support line, and every line above the price is a resistance line. Okay, so below the price, support, above, resistance. So what do we do? What do we do at support lines? We buy. And what do we do at resistance lines? We sell. So that's it. So what we're going for is a stop loss of 1.5 point and a take profit of 0.5 point. Some might say, well, but the stop loss is actually bigger than the take profit. Shouldn't it be the other way around? So our stop loss here is our airbag. So it is here to protect us, just in case the market like goes very fast, towards the wrong direction, and so we don't lose that much money. But the idea is that if we, for instance, we're gonna buy here at 520.75, 520.75. I'm gonna place my long buy here at 20.75, exactly the line here. So let's say the market actually goes down and then it takes my order. So I'm going to be long here. I'm going to be bought or long at 520.75. And then let's say the market continues going down towards my stop. What I'm going to do is I'm going to try to stop this trade, to leave this trade with the minimum loss. I will not wait for it to hit my airbag. Before my car uh, releases my airbag, I can still use the brakes, and that's what we're going to do. So this long stop is just to protect us from a sudden move of the market. Let's say it goes to 520.75, and then it goes a little bit down to 525. It breaks out for just 0.5 point or 1 point, and then there's still a chance of returning, coming back to our gain. All right, so this long stop is just in order to protect us from a sudden move of the market. And that's what we're going to do. So as it's not advisable to trade very close to the price, the market is being traded right now, but I believe that 24 and 25 is a little bit far from it. So I'm going to place here my short sell, my sell here. So basically I'm selling 5 contracts here, mini S&P at the price of 504 and a quarter, I'm sorry. And my profit is here at 523.75. 3/4. So I'm going for a half a point. And here at 525.75 is my stop loss. At the other end, I'm buying here. I have a long buy at 520.75, and my profit here it's at 521 and quarter. So basically, ladies, I'm buying here and I'm selling it more expensive. That's the basics of market. So if you buy something, you want to sell it more expensive than what you bought, so you can actually make some profit. So I've got a cell phone, and let's say I paid 1,000 for that. If I want to have some profit over it, I'm going to have to sell it for 1,100, 1,200, or above the price that I actually bought it. If I sell it for 900, means I'm losing 100, and the other way around. Like if I sold my phone for 1,000 and then I want to buy it back, well, if I sold it I sold it for 1,000 and I'm buying it back for 1,010, I'm losing this $10. Or if I buy it back for 1,100, I'm losing this 100. So basically, if I sold my phone and want to buy it back, I want to buy it for less money than what I actually sold it for the first time. So that's how I make money here in the market as well. So I'm selling here at 525, and I want to buy them back. I want to buy those 5 contracts back cheaper here at 523.75. All right, and so this is how we're going to work with supports and resistance. We're going to use them as a barrier to place our orders, because what we believe is that the market is going to reach this resistance line here or the support line, and it's going to have some trouble breaking out, and that's when we're going to make money. All right. Market's pretty dull right now, pretty slow, so it might take a while for it to get our orders. So see, it's still having trouble breaking out the 200, the 523 line here that we drew, as you can see it. Now, as it broke out, this line here became it was a support because it was below the price. And now that it has broken out, it's a resistance because it's above the price. See, as this 523 is resisting the price. So it's trying to go up, but it can't. Another thing that we should take a look at while we're trading is our matrix here, this book of offers. And here we can see the intentions of like whatever people want to do. So we have here in blue people who want to buy, and in red people who want to sell. What happens if we have more people buying? So you have more people buying, basically the buyers are going to push the price up because they're going to keep buying and buying and buying and buying. And if we have more people trying to sell, if we have more sellers here, so what they're going to do is they're going to push the price down because they're going to keep buying, they're going to keep consuming these contracts. They're going to sell to these people here who want to buy, and that's what's going on. So it's this clash here. But taking a look at the book, we can see that, for instance, at this 522, there are 1,500 contracts. So it's going to be harder for the price to break out this price because there are more people buying here than people selling. Take a look here. Only 400 people selling, 1,000 people selling, and still 1,500 contracts here buying. So let's see if they're gonna be able to push this price to push it down. And we're waiting here at 520 and 75 in order to buy. Little by little, they're pushing the price down. Let's see if they're gonna be able to bring it to 520 to get our order. Also, regarding the amount of contracts here in the screen, we also want to trade. We also want to place our order in a safe zone. What is a safe zone? Safe zone is an area here of price where there are more offers than the opposite side. So let's say, for instance, here that right now it's pretty even, as you can see, like it's pretty even. It's pretty hard for the market to move because there's like 1,100 people selling and then 1,400 people buying, and 1,300 uh, contracts here and then 1,300 contracts here on the way down. So this is pretty even. It's pretty much a tie. So that's why it's hard for the market to move. But what is a protection zone? It's a zone where there are like considerably amount of lots, amount of contracts here that would definitely pose as a protection. So, for instance, let all you can see here that all those zones of those levels, those layers of prices, we have like a maximum 1,600 here, right? 16, 1,400, 1,200, 1,300, 1,200, 1,200, and same thing happens here. So, what could we consider as a protection zone, a safe zone? It would be something here with more contracts. How much more? Well, 2,000. Okay, so let's say we had here 2,000 contracts, and then 2,000 again here, and then 2,000, 2,100, 2,200. So there would be an amount of contracts considerably higher than the other side. That would be definitely a safe zone, protection zone, where we would place our orders. We're back, and I paused the recording for a while. I'm waiting for the market to go down to the price or up, but as you guys can see, the market is pretty slow, and apparently this 522 and a quarter is becoming to be a support line. You can see like one, two, three, four, five candles touched it, and the market had trouble breaking out. So let's see if this 522 is going to hold, or if it's finally going to break out and go to our support line here. Hey guys, we're back, and as you can see, the price is slowly going down. So as you can see here, the 523 was really a support line here. Sometimes, like when the price was above it, and for one, two, three, four candles here, five, six candles here act as a support, and now it's a resistance. So what we're going to do is we're going to place our sell over there, 23. 23, 20. We're going to just move this one here to 23. There you go. Oh, it's going to get our orders. I'm going to be really embarrassed if it gets my order and then I lose money. But the price shall not pass the 520.75. Take a look as the support line is going to do what it's meant to do and actually support the price. We're close, very close. There you go. See, it hit the 575. It reached our resistance, our support line here at 520.75. Got our order, and right now we're actually losing one tick, a quarter of a point. Let's wait so it goes back. Come on, this line has got to support the price. See, back to the break even. I could leave the trade here without at least without losing money. Now we're making one tick. Ooh, back to zero. Come on, do not disappoint me. This is being recorded, guys. If I lose money here, that's gonna be shady. but I shall not lose. Thing is, there's only like 1,000 contracts here. Is slightly less than my gain here, but we're still in the game. We're still in the game. The thing with these platforms that we're always last, you know, we're always last in line. So for our profit, here 521 and a quarter, uh, the price has to go up to 521.50, at least touch it. It has to consume all these contracts here. So there you go, one tick for our gain, one tick for our gain. I can feel it. See, the price is already here at 521.25, but as we're always last in line, it has to move up to 521 and a half. It has to use all this loss. Maybe in the real account we would have already left with our profit, but here it's hard mode. And 300. Come on, give me a break. 200, and there you are. Here, see, 125 bucks, no sweat. I mean, yeah, we did sweat like half, one tick, right? Because it broke out for one tick. Now it's the second candle, the second time it's gonna reach this price. So no, we're not gonna buy here again because it's probably gonna break out. So we're gonna buy at the next level here, which is 520, 520. Here we are. Let me see how good this support and resistance line is. Okay, it held up in here and also in here. So okay. It's probably not as solid as this one here. This one here at 515, that's solid. 575. Because as you can see here, it's the minimum of today and also yesterday, Sunday. So, ooh, take a look where the price is right now, 520. Why? So why didn't it get our order? Because we are always last in line, guys. So the price actually has to touch the 1975 here to get our 200. There you go. We're in the game. We're in the game. 520, and it's back to 520.25. Come on, I want 2 ticks. I want another $100. Do not disappoint me. See, it still hasn't breached this 520 line, so that's still good for us. As you can see here, we have like 1,400 contracts, 1,500 contracts, slightly more than here than the opposite side, and we're gonna make some more money. Only 300 to go, 200 to go. Wow, did you see that was 22 and it didn't go through our order because we're last in line. Only 22 contracts. Wow. But I'm still confident we're gonna make money. The strategy does not fail. Told you guys. So this is how you make $250 a day, no sweat. Only 2 trades. So again, I'm not gonna repeat this trade here. I'm gonna wait until it reaches down to 517.75. I believe that's all for today, guys. I hope you guys enjoyed it and at least learned how to draw the lines here, and that's what it is. We're gonna buy at supports and we're gonna sell at resistance lines. Have a good one, guys, and practice as much as possible, and I'll see you soon.